Hello, viewers. My name is Joel Way. I would like to introduce you to Andrew Jant.
Hello.
Andrew Jant, he's a supply chain expert and tech-savvy cryptocurrency investor.
Correct.
And we are here to discuss what blockchain is and cryptocurrencies and how it's on the rise. So first we're going to start with Bitcoin, who is the original cryptocurrency and blockchain technology. And Andrew, what do you know about Bitcoin and the blockchain technology?
So we'll start, I guess, first with blockchain. So blockchain is essentially a computer network that makes forgery impossible, which is fantastic due to, the accounting frauds of Enron and that type of thing. Accounting fraud like Enron, or what brought down Enron, is essentially something that can be prevented through blockchain technology. So any entry into a general ledger is essentially replicated amongst peer-to-peer networks and visible all over. So you can't forge something. And with blockchain technology, once you enter a piece of data, it can never be erased. It can be changed and there can be updates and that kind of stuff, but it can never be erased. So there's always a track record of something in the past where a small number of accountants could in the past forge books and do that kind of stuff. Blockchain technology and accounting erases that probability entirely. There's some interesting things that I found out about blockchain during my studies, and according to Computer World, blockchain will generate $10.6 billion in revenue by 2023. So we're talking a massive industry that's essentially a disruptor industry, similar to like Tesla and those types of companies. There is one Australian stock market that is already using blockchain technology to operate, and that's been, I think, 2 years in the works already. So we can look forward to seeing maybe even someday the New York Stock Exchange is operating like with blockchain as the fundamental core behind it. Like I said, once data is entered into blockchain, it can never be erased. And this is I got a couple of case studies for you that I just wanted to talk about. Walmart had a bad batch of lettuce that was causing E. coli breakouts, and they teamed up with IBM to use blockchain technology to track from farm to table all of the lettuce, and they were able to predict and tell what lettuce was infected and what was not, and thus able to pull it off the shelves and thus able to get to the families that had purchased it. And that's an example where blockchain actually saved lives. So, it's the probability or the possibilities of blockchain are absolutely insane when you think about, if it's already saving lives just as a kind of a byproduct to work with Walmart, what can it do in the future? And it's going to be fantastic. And then the second thing that I have run across, De Beers, which is, the diamond company, has 35% of all the diamonds in the world. They use blockchain to make sure diamonds are not only authentic, but also making sure that they're not coming from conflict diamond regions. So one of the things that De Beers experienced when conflict diamonds became public knowledge was that people didn't want to buy diamond rings anymore for weddings. They didn't want to support war-torn areas and that type of stuff. And so De Beers has effectively used blockchain to eliminate that from their supply chains. And I guess one more thing I'd like to talk about blockchain before we move on is in regards to real estate. So right now in real estate, you have you have a listing and then you accept offers, and it's pretty private. You don't necessarily know what all the other bidders have or anything like that. With blockchain technology, they're talking about there would be like an eBay of real estate, and you would see live, up-to-date, real-time bids on properties and different aspects of real estate and stuff like that. So that's something that'll definitely change the real estate market significantly as we move forward in the next 10 years. So those are some examples of how blockchain works and some of the technology behind it. So I'll hand it back over to you.
And now that you kind of have an understanding of what blockchain is and its capabilities, I want to talk about the investment portion into cryptocurrencies and how you can do that. A lot of people use exchanges, some call Coinbase, Robinhood, Binance, and I kind of want to talk about the people, the demographic that are investing in these blockchain technologies. according to my research and what I've found online, millennials 25 to 34 are the most common investors in cryptocurrency, and it's a mostly male demographic, saying only 5% of cryptocurrency investors are female.
Yeah, that's a huge number. I mean, 95% of all cryptocurrency investors are male. Like,
Yeah,
I don't know what that is. We don't have the data to back up, like what regular investments or 401ks are or something like that. But that, to me, that number is just like is absolutely striking.
I agree.
So
I agree. And cryptocurrency is global. The countries that use the most crypto are the United States, Romania, and Czech Republic, and China. There's a lot that is motivating people to invest in the cryptocurrency industry, and a lot of it obviously is for the potential to grow their wealth, and but the big one is decentralization. Where do you see decentralization being adopted in the future of the United States or around the world?
Well, that's a great question because decentralization is something that the U.S. dollar used to be backed by gold, right? It used to have like the gold standard, and it used to say on every dollar like backed by the Treasury had that amount of gold to back up that dollar. Now the Fed just produces money whenever they want, and it's not backed by anything. So I've heard this discussion with cryptocurrencies. Well, it's not even backed by anything. And it's like, well, the money that you bought your house with and work for every day in your career is also no longer backed by anything. So it's an even playing field as far as I'm concerned. But the decentralization, deregulation is an amazing thing because that's how you get markets to thrive, right? And you look at, I've been an investor in cryptocurrencies for quite a while, and the offerings that these websites that Joel mentioned earlier had, they used to just have a handful of offerings of maybe 6 or 8 different types of cryptocurrencies you can buy. Now they have maybe 40 to 100 different types of new cryptocurrencies. So the decentralization brings the rise of new currencies, and also just the spreading and the growth of the industry in itself. So there's some pretty fantastic things going on with that.
Absolutely. And I just wanted to give you guys a couple examples of the top cryptocurrencies that are being traded right now. Like we said earlier, Bitcoin, which always probably will be at the top as the most highly purchased cryptocurrency. Ethereum and Polkadot and Chainlink. I really like Chainlink. Do you know much about it?
I don't.
Okay, so what it pretty much does is kind of bridges the gap between Ethereum and Bitcoin. It is basically like a supply chain model.
Okay.
But that's one I'm really interested in, and I've been watching.
I've got a couple of interesting facts about Bitcoin that I thought were just game changers for me, and that is that Bitcoin, as we speak today, at the time of the filming of this video, is now worth more than Visa and MasterCard combined, and those were the number 1 and number 2 payment mechanisms in the world. So Bitcoin already, which is essentially just getting started in corporate America. I mean, I think it's been 2 weeks since Tesla announced that they bought 1.5 billion in Bitcoin. So
right.
You're going to start to see other institutions going this way, and there's a lot of news that I've been seeing about institutions investing in Bitcoin. So I'll take a risk and say it's at around 56,000. It just hit what is the all-time high of 61,000 I think a couple days ago. But I wouldn't be surprised if by the end of 2021 or mid 2022 that it's 100,000 a Bitcoin.
Absolutely.
With all of this stuff, because I mean, it's not only is it as an investment, but it's security for existing funds that these companies have, which is instead of cash on hand, because cash on hand makes essentially nothing on a return. But mining in Bitcoin is not without consequence.
That's right.
The most interesting thing that I've seen that just even blew me away as a crypto investor was that Bitcoin mining now takes more electricity, or requires more electricity than the entire country of Argentina uses. So all
That's
of these
astounding.
trailers and all of these servers and all of these places all over the world that are mining Bitcoin are using more electricity than a modern day country. And there's some green concerns with that, and it doesn't just like grow on trees, right? I mean, it has to be mined, and that's a whole nother discussion. But I think that it's interesting to note that it's not without consequence, and as the green community catches on to that, I think there's going to be some backlash against not only Bitcoin but all the cryptocurrencies in general, because they all require the same fundamental mining techniques. So
Yeah, and man, it's all good things. They come with a catch at some point, but
Absolutely.
hopefully they can figure out a way to reduce their carbon footprint and mine Bitcoin sustainably.
Yep, that'd be great.
All right, guys. Now that we've kind of educated you, I would like to wrap it up. My name is Joel Way. This is Andrew Jant.
Thanks for having me on, Joel.
Yeah, you're welcome. Thanks for coming on.
Absolutely.